How y'all doing today? Sometimes I get a little southern at the end of the day. How y'all doing? I hope that you had a wonderful Wednesday. It's a little bit overcast here in the Bay Area, but we all know that the sun is shining somewhere. I'm so excited for this presentation. You're at Student Loans 101, the basics. So much has been happening with student loans with the change in administration. So I think that you're going to find some really, really valuable information, regardless where you are on your student loan journey. So welcome, welcome, welcome. Today is National Make a Dog's Day. Aww. It invites dog lovers everywhere to go the extra mile for their pup. And since Angelina has a cat, why don't we throw the cats in there too? And it's also National Color Day, you guys. Color is a silent language understood by all. Long before we had names for them, color served as a purpose, sending signals out that are still deeply ingrained in us. So happy National Color Day. And this one, when I want to think about my beloved manager, Michelle, National Nut Day. It's observed on October. This day is, it could be about your neighbor that lived up the street or your coworker, but it's about celebrating that healthy, nutritious snack nuts. So you guys, I just want to remind you that all of you guys will get a link to this presentation shortly afterwards. So don't worry about taking notes. Just sit back, relax, kick your shoes off, because you have an amazing opportunity to for this information. So remember, use the chat for comments and go ahead and welcome everybody. Hello, everyone. Thanks for coming. Utilize the Q&A for questions. Some of your questions are going to be very, very specific, so we're not going to be able to answer them tonight. But if you go to webinars at patelco.org, we will do the best we can to contact Angelini so that we can answer your questions. And yes, you guys, 3 of you lucky people will get an Amazon gift card. So let me introduce you to our amazing presenter today. We are so proud of her. Her mother should have a Mother's Day card every single day. Why? Because this woman is the bomb. She has been the lead for the Student Loan Empowerment Project at MyPath and has been working with student loan borrowers for over a year. And she's a former college advisor with years of experience assisting prospective college students with funding their college education. And guess what, you guys? She is also a financial social worker. This girl has not slept in 10 years. So please welcome Angelini Miranda. We are so happy and pleased to have you tonight discussing Student Loans 101 with our members.
Awesome. Thank you so much, Veronica, for having me. Thank you, Patelco, for this opportunity to inform you.
I want to see you, Angelini. Turn on your camera, honey.
Oh, sorry. Here we go. Hi, everyone. Thank you so much for having me. My name is Angelina Miranda, and I'm the Senior Director of Youth Leadership and Financial Capability at MyPath. Thank you again, Veronica, for the lovely introduction. And so I just want to talk a little bit about what we do at MyPath. Give me 1 second. Here we go. All right, so MyPath is one of 14 organizations that's part of the Student Loan Empowerment Network and partnered with the Department of Financial Protection and Innovation, so the DFPI. We provide free education and assistance to anyone who is dealing with student loan debt. So MyPath focuses on serving any California residents, and our goal is to support California student loan borrowers to navigate the complex student loan repayment system. And we offer support with general financial education and financial counseling, resolving issues with loan servicers and lenders, loan repayment options, loan forgiveness, cancellation and discharges, loan consolidation, deferment and forbearance, as well as default resolution. So MyPath, the Student Loan Empowerment Network, and the DFPI are not affiliated with Patelco Credit Union. So today, you will receive the basics of student loans. So we'll begin with giving you an overview of what student loan debt looks like in California, inform you of your rights as a borrower here in the state of California. We'll also discuss all things student loans, from lenders to servicers, and break down federal and private loans for you. You'll learn important terms related to student loans. You'll also learn about the Federal Student Aid website. We call it the FSA website, and wrap things up with how to identify and avoid student loan scams. Okay, so we'll begin to just give you an idea of how much student loan debt there is in the state of California. So there are 4 million borrowers that owe around $141 billion of student loan debt. The average loan debt a person holds is $37,000, and the average monthly payment borrowers make is $203. The majority of debt is held by borrowers between ages 35 to 49 years old, and the default rate here in California is 7%. Borrowers who attend for-profit institutions do have higher debt amounts and make less progress in paying down their student loan debt. In the United States overall, borrowers owe around $1.78 trillion of student loan debt. So that's a lot. All right. And so we'll also let you know about as a borrower, you have rights in the state of California. So in 2019, California introduced the Student Borrower Bill of Rights, also known as Assembly Bill 376. It was signed into law by Governor Gavin Newsom in 2020. The Student Borrower Bill of Rights expanded protections for Californians with student loans in the military, public service workers, older borrowers, and borrowers with disabilities. What this meant was that student loan servicers must provide clear and accurate information, minimize fees, keep records, and not engage in deceptive or abusive practices. AB 376 also requires servicers to work in the best interest of borrowers, prohibiting servicers from giving student loan borrowers inaccurate information or taking advantage of misunderstandings. And I'd like to show you a video of the Bill of Rights.
In California, when you take out a student loan, there are laws that protect you. You have the right to accurate information about your repayment. You have the right to clear answers to your questions. Servicers and lenders must minimize their fees. Servicers must apply all payments in a way that helps reduce the overall cost of the loan. Servicers must process and post payments in a timely fashion. Servicers must maintain accurate records. Servicers must not engage in deceptive or abusive practice in connection with loan servicing. Know your loan. Know your rights. Know your options. Learn more at dfpi.ca.gov/back on track.
All right. So we're going to begin with lenders versus servicers. I want to give you a breakdown of, or at least give you the difference between a lender and a servicer. So a lender is the company or organization lending you the money. This is where the loan originates. For example, federal loans, the Department of Education is the lender. For a servicer is pretty much the borrower's main point of contact. The servicer collects and processes loan payments from the borrower and processes any changes in repayment plans, will put you on deferments or forbearances when requested, or other activities, and the point is to prevent default. Note that the borrower may be transferred to several servicers throughout the life of the loan and may have more than one servicer. So we'll do a little deep dive on what this means, and a breakdown as well of the loan servicer's role when it comes to your student loans. So their role is to help you manage your student loans. They are paid to provide support on behalf of the government for free, so that you don't, this is like a service that you don't pay for at all. They work on behalf of the U.S. Department of Education to handle your federal loans. This includes billing, responding to your questions, and helping you to understand or change your repayment plan. So, if you have any issues managing your loans or making payments, your loan servicer can help you with this. You can call them up and speak to them directly about any issues you have with your student loans. They are supposed to work with you to ensure that you can manage your payments. All right. So, sometimes loans are actually transferred from one servicer to another, and you should be notified immediately if and when that happens. And then the new servicer will support you as you repay your loans. And so, what happens if you do end up getting your loans transferred to a new servicer or to another servicer? This is what should happen. Okay, I'm not saying that this is what will happen. So definitely want to know your rights and know when to advocate for yourself. So what should happen is that you should receive an email or a letter from your assigned servicer to inform you about the transfer. You will then receive a welcome letter from the new servicer as soon as they receive your loans. The letter will provide contact information for the new servicer and any next steps that you're going to need to take. All of your loan information will be transferred from your assigned servicer to your new servicer. There should be no changes in the terms of your loan. All right, so you definitely want to keep an eye out on that. Your previous loan servicer and new loan servicer will work together to make sure that all payments you make during the transfer process and are accredited to your loan account with the new servicer. So everything should be up to date without a problem. Okay. All right. So now we're going to be talking about federal loans versus private student loans. All right. So we all know that a loan is pretty much money, borrowed money that will help you pay for a big purchase. For example, a car, house, college education, right? The lender will take a borrower's income, credit score, and debt levels into consideration before deciding to offer them a loan. So for this presentation, we're talking about student loans that you use to pay for your education. All right. So federal loans are funded by the federal government. They are need-based and the conditions are mandated by law. So what this means is that certain terms, protections, and disclosures are not optional or negotiable. They are legally required by federal or state statutes, right? There's support for the borrower, such as income-driven repayment plans, loan forgiveness programs, and there's also default rehabilitation. So that's all under the federal loan. Now, with private loans, these are non-federal loans. The lenders, the bank or credit union, or a state agency or the school itself. Conditions are mandated by the lender. So these are the requirements that a borrower must meet to get the loan. Unfortunately, there are no affordable repayment plans, there's no loan forgiveness programs, and there's no default rehabilitation when it comes to private loans. So there's less support for the student loan borrower. All right, so we're going to get down to the federal versus private, very, very nitty gritty over here. So the main differences between federal and private loans are one, the repayment options. So when you have to start paying them back. With federal loans, payments aren't due until after you graduate. You have a grace period of about 6 months, right? For private loans, the payment may begin right away. Some lenders allow you to defer, meaning put off any payments while you're in school. When it comes to credit, for federal student loans, there are no credit checks needed. For private loans, on the other hand, it often requires a cosigner or at least good credit. When it comes to interest rates, the federal student loans have fixed interest rates, while the private student loans can have either fixed or variable interest rates, depending on what the lender gives you. In regards to loan forgiveness, federal student loans offer loan forgiveness programs for those who are eligible for that. Private student loans do not. Okay. And then just a little deeper with the types of federal loans that are available. So we have a Direct Plus loan. So this is available to graduate or professional students and eligible parents of dependent undergraduate students to help pay for the cost of the student's education at participating schools. meaning not all schools will offer a direct plus loan. I do want to say that there is a disclaimer. So beginning July 1st of 2026, the Graduate Plus loans, specifically for graduate and professional students, will be discontinued for new borrowers. This is due to the big bill that was signed by the president earlier this year. So there will be some changes to that. I believe that they are going to, for the Parent Plus loan, they are going to cap that per student. All right. Next, you have the direct subsidized loan, which is available to undergrad students. And this pretty much means that the federal government pays the interest on the loan as long as the student is in school at least part-time. Then we have the direct unsubsidized loan, which is a federal loan available to undergrad and graduate students. And the student is responsible for paying the interest. And they must pay the interest while they're in school, or they can have it rolled over to the principal amount when they finish school. Next, we have private loans. So a private loan is made by a private organization. So this could be a bank, a credit union, or a state-based or state-affiliated organization. So they differ by lender and by type of loan. And so they do have terms and conditions that are set by the lender. So you need to be sure that you understand the terms of your loan and keep in touch with the lender. Many private student loans require payments while you are in school, but some do allow you to defer. Again, that means to put off any payments while you're in school. Private student loans are often not subsidized, which means that you are responsible for paying all the interest on your loan. All right, so important terms to learn. So I'm going to give you some definitions here because I know I've thrown out a couple of terms that you might not know the definition to. So here we go. So a deferment. So a deferment allows the borrower to pause their federal student loan payments. So no payments for a specific amount of time, right? So during a deferment, interest that does not accrue on subsidized loans. All right, so these are for the folks who want to go back to school and they're in the process of paying off their loans, right? You can request a deferment from your servicer when you go back to school. Then you have a forbearance. So a forbearance allows a borrower to pause their federal student payments. The difference is here that the interest continues to accrue during this time period and may be capitalized. Accrued interest on a loan is pretty much added to the principal balance, which is what capitalized means. And so you would ask for a forbearance if you lost your job or you can't there's been a drop in your income and you can't make that payment. So again, it means that you'd have to get on the phone with your servicer to request a forbearance. Okay. Then we have delinquents. So your loan is considered delinquent after the first day you miss that payment. It becomes pretty much past due. That's what that means, right? When you're in default, this is pretty much the long-term failure to repay a loan according to the terms that you've agreed to, which has substantial negative impact on a borrower's credit score. If the borrower misses multiple loan payments over a significant amount of time, okay? So I do want to pause here and do a little bit of the avoiding the two Ds, right? You want to avoid delinquency um, or even defaulting on your student loan. So with delinquency, again, it's the first day after you miss the student loan payment, it goes past due or delinquent. Your loan account remains delinquent until you repay the past due amount or make arrangements with your servicer and ask for either a deferment or a forbearance, or maybe you want to change your repayment plan for a more affordable one. Now, when we talk about default, is if your loan continues to be delinquent, the loan may go into default. So this is the point when a loan is considered to be in default varies depending on the type of loan that you receive. So for federal direct loans or FFEL loans, it's considered to be in default if you don't make your scheduled payments for at least 270 days, right? So up to 270 days, that's when you know you're going to go into default. So that's a good amount of time. And our hope is that you pay off your student loans in full and on time so that you can avoid both delinquency and or defaulting. Okay. All right. So there are consequences that we need to talk about when your loan goes into becomes delinquent or goes into default. So when it comes to delinquency, the consequences include damage to your credit score. They can lower your credit score, making it harder to get loans, credit cards, or even rent an apartment. You can also lose eligibility to certain federal benefits like repayment plans or deferment or forbearance, right? It also increases your interest. So interest may increase to accrue the loan, potentially increasing the total amount that you owe. Now, when it comes to defaulting on your loans, you can go into collection actions, right? So the loan holder can begin collecting on the loan by taking money from your wages, tax refunds, or any other government benefits. So wage garnishments, they're going to withhold some of your income, right? There could be a tax refund offset. So your tax refunds will be withheld and applied toward your defaulted loan. Loss of eligibility for other federal aid. You can also face legal action from the lender. So your loan holder can take you to court. You can risk being sued, um, and then you may also be charged the court costs, collection fees, attorney fees, and other costs associated with the collection process. When it comes to credit damage, the default status is reported to the credit bureaus, further damaging your credit rating. And it may take years to reestablish a good credit record. Other consequences could include that you may not be able to renew a professional license, or you may be prohibited from enlisting in the armed forces. And then you may not also be able to purchase or sell assets such as real estate. Again, you want to avoid defaulting on your student loans as much as possible, and you should be speaking to your servicer so that you can prevent delinquency. Okay. All right, so other terms we're going to talk about are regarding your loan status. So here we go. So we have the fixed rate loan. So this is a loan with an interest rate that does not change over the life of the loan. It stays the same. Then we have variable rate loan. So this is a loan in which the interest rate can change based on prime rate or the index rate over the course of the loan. Then you have a grace period, and a grace period is pretty much the time during where you do not make a required payment. They give you about 6 month grace period after you graduate so that you can prepare, right, for that to be able to make those payments. So it generally begins the day after. It's the day after a borrower graduates, leaves school, or drops below half-time enrollment. Again, when you are not a full-time student or you decide to drop out, you still owe those student loans. So you are expected to pay those back. Okay. Then we have the repayment period, which is a maximum time period over which you must repay the student loan. So right now, currently, we have borrowers who are paying anywhere between 10 to 30 years for their federal student loans. And then there's a repayment plan. So it's a plan that outlines your monthly loan repayment period, and how much interest you will pay over the life of the loan. And then there's the master promissory note. This is a legal document in which you promise to repay your federal student loans at any and any accrued interest and fees to your lender. So all of this you would have signed when you've taken out the loans. Okay. Next, we will be talking about consolidation. So consolidation is pretty much a process that allows a borrower to combine multiple federal student loans into one loan, which allows the borrower to make one monthly payment to one servicer. The new interest rate of the loan is pretty much a weighted average of the prior loan rates. And some of the benefits and disadvantages to consolidate. Benefits include simplifying payments into one monthly payment to one servicer. Direct consolidation loans actually give you access to income-driven repayment plans and forgiveness programs. There's a fixed interest rate. The disadvantages include longer payment periods, sometimes more interest, and then there is also there could be a loss of certain borrower benefits. So with this, what we say is loan consolidation is not always a good option, and sometimes it's not even needed, right? So it really does depend. Also note that you cannot consolidate any federal loans with any private loans. Okay. All right, next we're going to talk about recertification. So this is very specific to when you are on an income-driven repayment plan, or if you're on a forgiveness program like PSLF, which is the Public Service Loan Forgiveness Program. You will need to recertify. So a couple of facts regarding recertification, pretty much the process of providing your loan servicer with an updated income and family size information on a yearly basis. So this is something that you're going to do every year. And then the servicer actually uses this information to recalculate your monthly payment, the monthly payment amount that you're going to be paying. So theoretically, if your income goes down, your payment should go down as well. So we want to talk about the importance of recertifying, right? So why would you want to recertify? Well, one, changing circumstances, right? Income-driven repayment plans really calculate your monthly payment based on your income and family size, which can fluctuate over time, right? So maybe there's an additional family member that you're going to be what do you call it, caring for, or maybe there's a loss of income. You lost a job, or your partner lost their job, and your income has decreased. So that, again, the fluctuation, it changes over time. Keeping payments accurate. So recertifying ensures that your monthly payments remain aligned with your current financial situation and the ability to repay. Again, they are there, they want to help you make those payments, right? Um, Next is avoiding increased payments. So if you don't recertify, your monthly payment might increase to the standard repayment amount. So it's gonna go back to the defaulted repayment plan, that standard one. And this could potentially lead to a financial strain. Also, there's potential for loan forgiveness, right? So missing recertification deadlines can also impact your eligibility for loan forgiveness programs. So again, we want to definitely recertify when needed. Okay. So next we're going to talk about the federal student aid account. So all about the FSA. So your federal student loan information, you can access all of that information about your federal student loans at the Department of Education's Federal Student Aid website, the FSA website. By going to studentaid.gov. So here you will find all the federal student loans on your studentaid.gov account, and no private loans will be listed here. So again, this is all going to be all your federal student loans will be listed here. Once you've logged into your account, you can find details on a dashboard. Some key pieces of information that you'll need to know about your federal student aids are the types of student loans that you have, the status of your loans, and who holds your loans and who your loan servicer is. Okay. So if you've applied to the FAFSA and you've taken out loans and you've taken out grants, this is actually where you would go. So it's the same account as when you're applying for FAFSA. All right. So what you'll need to be able to get your account or even to log in is your social security number, your full name, and your date of birth. You'll want to create a username and a password, and you'll also complete challenge questions so that you can retrieve your account information if you ever forget, right? And so it's important to note that they actually use the double authentication. So you'll set that up when you first log in, and it's the first, if it's been a long time, they're definitely gonna start all over with you, right? And ask you to change your information there. So once you're logged in and you're inside, you will notice the first thing you'll see is your dashboard. So here you'll get everything that you need to know about your loans. Again, the type of student loans that you've taken out, the status of those loans, who holds the loans, who is your loan servicer. It also shows you the total amount that you owe, including the interest, and a breakdown of all your student loans. So here is where you'll be able to see everything Now, the disclaimer here is that not all of your information will be here, will be updated. There will be some discrepancies, and I only say that as a disclaimer because we don't have a lot of staff working in the Department of Education to be able to update this in a timely manner. So it is going to be up to you to make sure that everything is up to date. So I hope that everyone has a chance to take a look at what their student loans are looking like at this moment. Okay. All right, other information that you'll find over here, you'll find information about loans and grants. It really breaks down all the loans and grants available to you. It also explains how financial aid works and the eligibility. A great resource for everyone who wants to go back to school. You'll find it here. You'll also see loan repayment options. So you'll learn about all the repayment options and the forgiveness programs that are available at the moment. You'll learn about deferment and forbearance, as well as delinquency and default. You can find it all here on this website. You'll also learn about the available loan forgiveness programs and student debt relief services that are available. They also have tools that you can use, like the loan simulator. And so this is a tool that I go to whenever I meet with any of my clients, and we try to look for the best student loan repayment options for them. So with the loan simulator, this is really to help your student loan debt, help you with your student loan debt if you're having trouble to pay your loans, right? It'll also help you prepare for when the time comes when you start paying off your loans. Say you're not in repayment just yet, you can create a plan using this tool. And then it can also help you figure out how you can borrow money if you want to go back to school. So definitely a great tool to use. So I'm going to show you a little example of how it works over here. So what you want to do is you input the following information. So it's your personal information. You'll put in your tax, employment, your salary, your marital status, any children or dependents that you have. And it'll also upload all your loan information. So the type of loan you have, the interest, the total amount. When you're signed into your account, this will automatically populate in this. So that's what makes this a pretty cool tool. And then it'll ask you for your repayment goal, right? And those options include, I want to pay off my loans as fast as possible. Or maybe you just want to pay it off by a certain date, or you want to see what is the lowest payment that you can make over time, right? So it's completely up to you of which goal you want to put. And so what it does, it calculates your information and it lays out all the repayment options that you're eligible for. So it'll show you the amount or the range of the amount of your monthly payments would look like. It'll also tell you when you'll be able to pay your loans off by, and the total amount that you'll be paying, which includes the interest. So as you can see over here, there's a save plan, there's the standard repayment and the graduated repayment plan. And so it kind of guides you, right, to show you exactly how much you'll be paying per month and when you'll be able to pay off those loans. Okay. So there is a disclaimer here, and I do want to say that it's just a calculation and it's to be taken as, not what you'll be paying, right? Again, a calculation, a guesstimation, not a legit number, but it is a good tool to kind of give you an idea of what you're going to be paying. Okay. And so the other thing too is that not all income-driven repayment plans are currently available. So although this one showed you the SAVE plan, the truth of the matter is that the SAVE plan is actually in litigation, so it's not an option. So yeah, just wanted to put that out there as well. All right, so the other thing that you'll be able to see on the website are updates on student loan repayment plans and everything student loan related, right? So we'd like to share a couple of important updates and changes regarding federal repayment options for borrowers with any new loans after July 1st of 2026. So borrowers will only be able to choose between two repayment plans. So that's the Repayment Assistance Plan, RAP, which is a new one, and the new standard repayment plan. If a borrower consolidates a loan after July 1st of 2026, they will only be able to repay via RAP or the standard new standard plan. And then borrowers with any new loans after July 7, 2027 will not have access to economic hardship or unemployment deferments and will only be able to be in forbearance for no more than 9 months in the 24-month period. Now, I put that up here as an example to show you that it's important for you to stay updated, and the FSA website is a good place to get that information. Also, you can also look up this information in the Department of Education. And staying up to date, you want to have the latest updates and news on all things federal student loans, right? You want to keep up with policy changes. So the federal student loan policies change due to new litigations or even administration actions, right? So staying informed really ensures that you understand how these changes might impact your repayment plan, your eligibility for forgiveness, and even your loan terms. So, for example, the SAVE plan or the public service loan forgiveness programs can be subject to change and legal challenges, requiring you to be aware of the latest updates to benefit from them, right? So, anyone, right, any borrower at the moment who's on the SAVE plan is on a forbearance because it is in litigation, right? And anyone who is applying for an income driven repayment plan, a save will not be an option for you, right? So those are just examples of keeping up with policy changes. Staying up to date also helps you to verify that your payment history and important information are transferred correctly, especially if enrollment in programs like PSLF or an IDR plan, income driven repayment plans. Staying up to date also helps you to avoid penalties or negative consequences like missing payments due to confusion about updates that can lead to late fees, increased interest rates, and damage your credit score, right? Delinquency can lead to default, which has severe consequences, like we talked about earlier, wage garnishment or loss of eligibility for future federal aid. So you want to take advantage of available benefits and options as well, right? Because they'll also report those. All right. I feel like I said a lot in terms of staying up to date. So what we're gonna talk about next is being aware of scams and scammers. Okay, so we're gonna kick it off with a video.
Hi, this is Kathy.
There are many scams disguised as help for student loan forgiveness, loan consolidation, or credit correction.
Suspension of student loan repayment ends soon. Contact Student Assistance at 1-866-55.
Please provide your FSA ID. We can help with credit correction.
Immediate loan forgiveness, no credit check, and lower monthly payment. We can help with credit correction. Payment processing made easy. Lower your payments.
You must call now.
Here are some tips for being a cautious consumer. Beware the hook. The scammer may make a vague reference to the president, the administration, or the Department of Education to fake credibility. Look out for pressure points, statements that create an urgency for a quick decision. If it sounds too good to be true, it probably is. Be skeptical of callers asking for your loan information.
Yeah, right.
Or programs requiring upfront fees.
Seriously?
FSA will never request a username or password.
For real?
Play it safe.
All right, so we know that there are a lot of scammers taking advantage of this situation right now with our borrowers. So with this said, you want to be aware of scammers who promise immediate student loan forgiveness or debt cancellation. I could tell you something, it's going to take work to do this. No one can promise you to get all your loans forgiven or even your debt canceled. Okay. They also promise to eliminate payments or you have $0 payments. They offer to help with consolidation even when it's not needed, right? They guarantee, right? The term guarantee alone, that they can remove legally owed debts from your credit report. No one can do that but you, right? They claim to be affiliated with the Department of Education, and they also pressure you to pay upfront fees. Now, one thing that I know is that when paying for a service, this is the information I'm giving you is free information that you can actually look up yourself. And to be honest with you, like, this is free. This information is free. So if they're asking for payment up front, then you know it's definitely a scam. Okay. You also want to be aware if they require borrowers to sign a third-party organization or a power of attorney, that's definite red flag. Or if they even request for your federal student aid account, red flags. So the last 2 points right there are red flags for sure. Okay, no one should be requesting anything like this from you. And I would never also ask for your own password and username to get into your account, right? Red flag, red flag, red flag. All right, so remember, if a company reaches out to you via call or text or letter offering assistance, do not respond. Verify the information and research the company who's reaching out to you. You want to check your student loan servicer and studentaid.gov portal for communication regarding your loan, right? You may be receiving calls from your servicer if you are in default, right? So that's potential there. And your loan holder will help you with your defaulted loans for free. Okay, so the support is there. All you have to do is ask for it. Okay. All right. So do we have any questions? I see it in the chat. So if anyone has any questions, please feel free.
Angeli, Jackie wanted to know, are federal loans available for private, not-for-profit schools?
Yes, they should be. So
Okay.
a private school will, if they are on the list of the federal, in the FAFSA, then yeah, they'll be able to provide federal loans to you.
I don't know if this is a grant question or not, but she says, is there any financial aid that are not loans, but they're for low income earners?
Yeah, so the grants. So they do have grants. That's free money that you could use. There's also scholarships that you can look up that could help you pay for school as well. Unfortunately, that you have to work for the scholarship, right? Fortunately and unfortunately, there are many out there that go unclaimed. But it takes work, right? You have to put in the work and you have to do the search in order for you to find these scholarships.
Okay, and where do we find the information for the federal loans? Is there a link? Do we just have to Google it?
Yeah, so you want to go to FAFSA.org. So that's the federal student aid. So the studentaid.gov, that website that I have. I do have a link. Let me, I could send that to you and you can share it with them. But
Okay.
studentaid.gov. Studentaid.gov is where you want to go, and that's where you apply for the FAFSA.
Yeah, so we can just put, Michelle put it in the things.
Perfect. Yeah. Remember, there are some websites that claim to be studentaid.gov. You want to make sure that it's the .gov, not .com or .org. It's .gov to make sure it's legit.
Perfect. So I have a couple of more questions here. You can do your best if you can't answer them. They can always send us an email at webinars@patelco.org. So she says, what are the typical rates? What are typical, I don't understand. What is typical I treat rates for federal and private loans?
So they vary. I think, yeah, no, they vary. So with private loans, it varies. With federal student loans, I've seen anywhere between 3% to 6%, depending on the type of loan that it is and when you take it out. So that all varies.
Well, Jose wants to know if he read that loans can be forgiven if you don't pay for 20 years. Is that true?
No, you have to pay. So in order for a loan to be forgiven, you have to pay into it. So for example, there's the PSLF that I mentioned. That's the Public Service Loan Forgiveness Program. One, you have to qualify to be in that program to get your loans forgiven. So the qualifications are you need to work for a qualifying employer, meaning that's the federal, state, city, local government, or a nonprofit organization, right? They have to be a qualified employer. You have to be on an income-driven repayment plan. So that's the SAVE plan, ICR, IBR. So you have to be on an IDR plan, and you have to make 120 payments. Those payments under an IDR, 120. So that's 10 years, right? So you're making 10 years of payments before they can be forgiven. So it's you have to pay. If you don't pay, you're going to go into default. If you don't pay any loans after 20 years, you'll be in default after 270 days. So that is not a true statement, Jose.
Can my undergraduate student apply for a private student loan outside of the parent private loan offered by the school?
Yes. And remember, because the school offers it doesn't mean you have to take it out, right? They will offer you all kinds of loans, the federal loans, right? You could take them out, or you don't have to if you don't want to. In terms of private loans, my question to you is, can you afford to take out federal student loans and private loans? And when you graduate, is the student going to be able to repay those, right? And remember, federal loans are one thing and private loans are another thing. So that means per month, they're going to be paying their federal student loans and their private loans. So it really is a matter of, like, you could take out all these loans you want. The question is, can you repay them? And remember, the interest rate's going to be different on all of them, depending on when you take them out.
So Lisa says there's a New York Times article in August recommending that those on the SAVE plan move to the only other IDR plan available before the SAVE plan ends in the spring of 2026. Is there still this recommendation given that there is pending litigation?
I say that it's up to the borrower. If the borrower is able to make payments and they want to start their payments, they're like, you know what, I don't want to be in a forbearance anymore, because as of August 1st, the forbearance, the interest started accruing. So that means that the the loan is getting bigger, bigger, and bigger, right? The amount you owe is going to get bigger. So it's up to the borrower. When I meet with my borrowers one-on-one, it depends on if financially are they able to make those payments. Then yes, let's talk about which repayment plan they would like to get on to begin those payments, right? It depends on your circumstance. It depends on whether your budget, right? Can you afford to or not? I also work with clients who say, actually, I'd rather wait for the forbearance and then have them tell me what I need to do. And that's what they're comfortable with. So again, it depends on you, your situation, your financial goal, and if you can afford to do it. So there's no real straight answer to that. It really just depends on the borrower and what they want, what their goal is.
So Cecilia says, we're still waiting for the revised financial aid after submitting an appeal. I'm wondering if my student should apply for an outside private loan versus the parent private loan offered by the school. We still have enough time to be approved by the student loan outside of what the school is offering as soon as the revised aid comes out. That's a mouthful there.
Yeah, again, it's up to you to decide what you want to do. And for me, it's about thinking about after. When my student graduates, when they, after their 6-month grace period, how much in debt are they going to be and how can they start repaying those? And yeah, it's really about preparing for that piece, right? Yeah.
So last question here. My husband and I consolidated our student loans over 20 years ago. Over that time, they had it in forbearance and they paid more interest than the loan itself, unfortunately. Now it's being serviced by Mohila. Both my husband and I are currently unemployed. Is it better to ask for forbearance or a deferment?
So you would probably ask for a forbearance because a deferment means that you're going to be going back to school, right? So it would be a forbearance. But then also they should be, oh gosh, it's a very tricky situation that you're in. So I would say if you want, you can actually make a meeting with me, and then we can talk through what your options are, because this is a very tricky situation. Also, it's a consolidated loan over 20 years. So yeah, I think it would be good for
Yeah,
us
they
to
might
meet
use.
and talk about that. Yeah, it's a very, very specific situation that you're in. And I don't have an answer to that because I think there's a lot more information that we need to gather before we can even speak to that.
What a complicated, insidious conversation about the student loans. So much has happened,
Yes.
and so much is currently happening. What is your recommendation for those of us who are in the middle of this storm on how to get to safe harbor?
Yes. So I want to actually let me give you my contact information because every situation is different. And again, it requires a lot more information that you got to dive deep a little bit here. Well, one, please take my survey. I have a survey link, and if we could share this with you at the end, I'll come back to this. But for those of you who are, would like individual support, please go ahead, click on the QR code. This is MyPath's landing page. You can actually click here button, and you will be able to fill out a form and answer some questions for me, and we can schedule a meeting so that we can discuss what kind of support or how we can actually support you with your student loans. But I think that the best thing is to take advantage of the Student Loan Empowerment Network and to get assistance there. If I can't help you myself, I would refer you to a specialized borrower for specialized borrower support. And what that means is that you would be working with one of our legal aid agencies who specialize. These are attorneys who specialize in student loans, right? And so I would refer you to them, and you would be able to get support from them. So
Well, I always say that you don't have to be an expert if you know one. And we have so much gratitude and appreciation, Angeli, for you to come and navigate this maelstrom of information. I'd like to encourage our members to take the QR code and to contact them for your individual questions, so that that your financial health will not be impaired by all the things that are happening in our government and all the changes that we have to endure. It was amazing for you to come. We really appreciate you. It was such a great, informative presentation. And me, as a parent of young people going to school right now, my son wants to go to graduate school. We have no idea how he's going to do that now. So, and all of our members are thanking you for your wonderful information. And again, you guys, I will really encourage you to get the expert advice so that you can have a chance at growing your financial health, even if you have lots of student loans.
Awesome. Thank you so much for the opportunity. And thank you all so much. I hope you did find this very helpful, very informative. And please take down my email and our website, and also the Student Loan Empowerment Network. I'll share these links with Veronica, and she'll be able to share that with you as well. Thank you all so much.
Yeah, you can reach me at webinars@patelco.org. Have an absolutely stunning evening. You did good today because you showed up for your financial health. And I always applaud that. So thank you so very much. And we will see you on the rebound. Have a good night, everybody. Thank you.
Good night, everyone. Thank you.
Hey, thanks for watching. Want more financial advice? Make sure you watch the video here. And want to hit that subscribe button for more financial deliciousness? Hit that button here.